Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the leader of the S&P 500, the leader with over a $2 trillion market cap, the one and only AAPL, also known as Apple. Is this stock going to hit $300? Should you buy? Should you sell? Should you hold? We're going to be breaking down everything. On top of that, there is a whole bunch of analysts that are giving Apple crazy price target. So we're going to be breaking this all down. So I hope you guys enjoy it. If you guys get anything in value, hit that like button, subscribe. If you have any questions, let me know down in the comments. So let's start from the beginning. Apple right in here was trading for about 158 bucks. Came all the way up to highs at about $182. Consolidated here for a while, curled down and hit $137. Now that $137 was old resistance that started acting as new support. You'll notice that with technical analysis is that old resistance often acts as new support. So then the stock pretty much went from about 137 bucks all the way up to $173 without skipping a beat. On top of that, the company was releasing earnings and they were actually doing very well. They brought in about $97 billion here, and then on this one they brought in about $82 billion and still beating expectations on both, and there was no signs of this stock stopping. On top of that, you're going to be getting a dividend of about 23 cents. So a lot of people like to say, well, Apple's overvalued. You shouldn't buy into Apple. Personally, those people that say that don't know what they're talking about. The reason why is because Apple is the leader of pretty much the S&P 500. It's a perfect stock for beginners to invest in. The company has over $160 billion in cash, meaning if they ever slow down or they go through a recession or a hard time, they have enough cash on hand to continue to invest, innovate, pay their employees, and get through a hard time, which every company you invest in should have something like that. It's almost like a little reserve. On top of that, for each share you have, you're going to be getting 23 cents per quarter. That's going to be passive income. Personally, what you're going to do is have a broker that offers drip so you can take those dividends, reinvest them back in Apple, and you'll get better growth and you'll get more dividends each and every quarter, which is beautiful. On top of that, guys, we did have an announcement today. So we had a company called Credit Suzy, which pretty much upgraded Apple's price target to a whopping $201. So meaning if you bought Apple right now at about 173 bucks, you're looking at an upside of 16%. 16%, which is beautiful, right? The reason why is because the general S&P 500 has a return of about 10%. Okay, so meaning if you invest in Apple, you could be outperforming the general market, which is another thing you should look at. And also, guys, comparing this to the S&P 500, in the last month, Apple stock is up about 15%. The S&P 500 is up about 12%. So I definitely think that everybody should be investing in Apple. And for those of you that are saying, well, Carter, why would I buy right now? Why would I buy at 173 bucks? I get it. You don't want to buy up on top. The strategy that I would recommend, right? The strategy that I would recommend is to dollar cost average. Dollar cost averaging is a great way to invest into Apple, growth stocks, and companies that you believe in. What you would do is you would invest on a weekly, monthly basis into Apple. And as the company sells off, just like it's done in the past, you're going to be averaging down your position. So once the stock recovers, you're going to be making a lot more money because your average cost per share is so low. On top of that, you guys are saying, well, it's overvalued. Well, we had those analysts giving that price target of 201. I think that's just the start of Apple. I really think that Apple's new Apple Spend Later is going to be a game changer for the finance industry. For those of you that don't know what that is, if you pay with Apple Pay, you can now spread your payments instead of paying everything all at once and do 6 months of interest-free payments, which is crazy. This is going to be a game changer because Apple will now know kind of the revenue that should be coming in because of these payments. I think that's a great thing for the company. It's going to bring them in a lot of cash because there's also going to have people that can't pay that off, and they're going to be charging an interest for it. So it's kind of a win-win for the company. I just think that this is such a stable stock. You're not going to have to worry about this thing closing on you. You're not going to have to worry about volatility. It has a beautiful beautiful upward trend, right? Even if you guys buy at peak tops, 3 years later, you're up on your money. Even if you buy at the top, in 2000, what was that, 2007, you're up on your money. If you bought in, right before the crash of 2020, you're up on your money. Every time you invest in Apple, as long as you have a long-term outlook, dollar cost averaging, you're going to make money. I think there's so much upside for this company. It's crazy. And looking at, the 10-minute chart, you guys can see just how stable this stock is. Just a beautiful, beautiful growth, guys. So, guys, that is it. That's kind of what's going on with Apple. We had some companies giving a $200 $200 price target. I think this thing could easily hit 250 to about 225 by the end, or probably by early next year. I think that's a very, very stable prediction here. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. We'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.